we're going to turn to our stock of the day. Obviously, that's more of a stock that is making news on the day. It is Flight Centre. The group has bought the UK cruise agency Igloo and raised its FY26 profit outlook. Flight Centre now forecasting FY26 profit to come in between $315 and $350 million, which would be a 3% increase, reflecting Igloo's contribution. As a result, Jefferies raising its target price for Flight Centre to $15.50 with a buy rating attached to it. It's flagged structural headwinds in the leisure travel segment, but backs Flight Centre's push into less commoditised categories such as luxury and cruising. And additionally, Howard, it has launched its loyalty program. Also, its AI adoption is accelerating. What do you make of Flight Centre?
Look, Flight Centre has always been a very well-run business. It got absolutely hammered during COVID when nobody could actually fly anywhere. They had all these premises around the world that they had to pay rent on. They had all the staff around the world that was costing them money. So they went into a period where they actually lost quite a bit of money in 2020 and 2021. They've now been coming out of that. The business is starting to look better. But the risk, of course, is now that we know that the world could shut down its entire airline industry and hotel industry if there's another pandemic, it does create a much bigger risk scenario for Flight Centre. But extremely well-run business. They've always tried to operate the business on negligible debt, ran up some debt during COVID, which they've been gradually paying back. And it doesn't pass our filters because of recovering from COVID, so our members wouldn't be looking at it at all. But certainly among the businesses that you'd expect in another couple of years' time will be passing our filters, and our members would probably quite like. I actually still have a small holding in Flight Centre. I sold most of it during COVID, kept some simply because I've always liked the business and thought one day it'll all be sorted out, and I was happy to keep a bit. So I personally own a little bit.
So it's a hold for you?
Yeah, it's a hold for me.
It sounds then you're a little reluctant to get into travel and leisure segment because you say, what, the next pandemic is just around the corner?
No, I'm not saying the next pandemic is around the corner. I'm just saying it's a risk you need to take into account when you look at the various risks. All businesses have risks. And what we realized after the pandemic is the risk of a pandemic is actually not a shorter risk as we thought. We originally thought, like when there's been volcanoes or previous pandemics, airline industry was shut down in parts of the world for a few months, but this became years. So it's a bigger risk with more damage than we previously thought, and you need to take that into account.
Now, I think, Howard, we are joined by Mathan. Let's just see if we've got him. You there? You can hear me? We're all good to go. Excellent. Mathan, we are at our stock of the day, which is Flight Centre, and it has just bought that UK cruise agency Igloo, raised its profit outlook. How are you viewing it?
Yeah, look, it's an interesting play because I've always been a big fan of Flight Centre because I love the fact that the CEO thinks years in advance and he always talks the long story. That's always positive for management because most of our management tends to be very short-term oriented, partly because of the markets. But it is a tough sector. I'm not so worried about the pandemic per se. That dynamics is quite unique. I suspect that even if we had a pandemic, the governments will react completely differently at the moment because they just can't afford to do what they did before. Mind you, then again, there's a lot of things happening that probably ask that question multiple times. But I think that the interesting part here is just the consumer cycle. We've had in the local market a lot of the market darling retailers, classic cyclicals, underperform, and that tells you the consumers are under pressure. Travel overall, I think it's been, you had a bit of a revenge travel come through after the pandemic. That's starting to run out, and things have come through, and also a lot of the players like the airlines have squeezed the margins for agencies. So despite that, it's been tough. Flight Centre, you have to remember also they raised a lot of capital. There's a number of them raised the capital, like Webjet as well, raised a lot of capital after the pandemic, which basically meant their share price is, pre-pandemic is literally halved. So the $40 before pandemic is now really $20. So they were expensive and now they've come back hard. I think it's, around here it's not too expensive, but it's not cheap either. So you're really playing the cycle here. So for me, sure, there could, there's backward-looking data will be okay, but it's where their forward-looking outlook is going to be, and I think it's going to be tough. Slowing global growth, weakening consumer spending will have an effect. So we're not jumping into that sector at the moment. I'm more than happy to sit back and watch. I mean, if you look at where things like Qantas are trading at, you would think that Flight Centre should be doing a lot better, but it's not. So the cycle is slowing down, so I'd be a bit cautious in the travel sector.
Willing to hold it though?
Yeah, look, I think Flight Centre is probably cheaper of most of them, so I think it's okay. But remember, it's a cyclical. The cycle is on the weaker side, so you're probably going to be holding it for a bit.
That is double hold then for our stock of the day, Flight Centre.